Swiss bank Credit Suisse says it will move to shore up its finances, borrowing up to $54 billion from the central bank after its shares plunged, dragging down other major European lenders in the wake of bank failures in the United States. Geneva, Swiss bank Credit Suisse said Thursday it will move to shore up its finances, borrowing up to $54 billion from the central bank after its shares plunged, dragging down other major European lenders in the wake of bank failures in the United States. Credit Suisse said would exercise an option to borrow up to 50 billion francs, $53.7 billion, from the central bank. This additional liquidity would support Credit Suisse's core businesses and clients as Credit Suisse takes the necessary steps to create a simpler and more focused bank built around client needs, the bank said. Fanning new fears about the health of financial institutions following the recent collapse of Silicon Valley Bank and Signature Bank in the U.S., at one point, Credit Suisse shares lost more than a quarter of their value on Wednesday. The share price hit a record low after the bank's biggest shareholder, the Saudi National Bank, told news outlets that it would not put more money into the Swiss lender, which was beset by problems long before the U.S. banks collapsed. The Saudi bank is seeking to avoid regulations that kick in with a stake above 10%, having invested some 1.5 billion Swiss francs to acquire a holding just under that threshold. The turmoil prompted an automatic pause in trading of Credit Suisse shares on the Swiss market and sent shares of other European banks tumbling, some by double digits. Speaking Wednesday at a financial conference in the Saudi capital of Riyadh, Credit Suisse chairman Axel Lehmann defended the bank, saying, "We already took the medicine to reduce risks." When asked if he would rule out government assistance in the future, he said, "That's not a topic. We are regulated. We have strong capital ratios, very strong balance sheet. We are all hands on deck, so that's not a topic whatsoever." Switzerland's central bank announced late Wednesday that it was prepared to act, saying it would support Credit Suisse if needed. A statement from the bank did not specify whether the support would come in the form of cash or loans or other assistance. The regulators said they believed the bank had enough money to meet its obligations. A day earlier, Credit Suisse reported that managers had identified material weaknesses in the bank's internal controls on financial reporting as of the end of last year. That fanned new doubts about the bank's ability to weather the storm. Credit Suisse stock dropped about 30% to about 1.6 Swiss francs, $1.73, before clawing back to a 24% loss at 1.70 francs, $1.83, at the close of trading on the SIX stock exchange. At its lowest, the price was down more than 85% from February 2021. After the joint announcement from the Swiss National Bank and the Swiss financial markets regulator, the shares also made up some ground on Wall Street. The stock has suffered a long, sustained decline. In 2007, the bank's shares traded at more than 80 francs, $86.71 each. With concerns about the possibility of more hidden trouble in the banking system, investors were quick to sell bank stocks. France's Société Générale SA dropped 12% at one point. France's BNP Paribas fell more than 10%. Germany's Deutsche Bank tumbled 8%, and Britain's Barclays Bank was down nearly 8%. Trading in the two French banks was briefly suspended. The Stoxx Banks index of 21 leading European lenders sagged 8.4% following relative calm in the markets Tuesday. Shares in U.S. markets were mixed on Wednesday, with the Nasdaq Composite edging 0.1% higher while the S&P 500 dropped 0.7%. The Dow Jones Industrial Average ended 0.9% lower after logging bigger losses early in the session. Japanese banks resumed their downtrend, with Resona Holdings, the nation's number 5 bank, falling 5% while other major banks fell more than 3%. The turbulence came a day ahead of a meeting by the European Central Bank. President Christine Lagarde said last week, before the U.S. failures, that the bank would very likely increase interest rates by a half percentage point to fight against inflation. Markets were watching closely to see if the bank carries through despite the latest turmoil. It has multiple subsidiaries outside Switzerland and handles trading for hedge funds. Credit Suisse is not just a Swiss problem but a global one, he said. He noted, however, that the bank's problems were well known so do not come as a complete shock to either investors or policymakers. The troubles once more raise the question about whether this is the beginning of a global crisis or just another idiosyncratic case, Kenningham said in a note. Credit Suisse was widely seen as the weakest link among Europe's large banks, but it is not the only bank which has struggled with weak profitability in recent years. Leaving a Credit Suisse branch in Geneva, Fadi Rashid said he and his wife are worried about the bank's health. He planned to transfer some money to UBS. I find it hard to believe that Credit Suisse is going to be able to get rid of these problems and get through it, said Rashid, a 56-year-old doctor. Investors responded to a broader structural problem in banking following a long period of low interest rates and very loose monetary policy, said Sasha Stefan, professor of finance at the Frankfurt School of Finance and Management. In order to earn some yield, banks needed to take more risks, and some banks did this more prudently than others. European finance ministers said this week that their banking system has no direct exposure to the US bank failures. Europe strengthened its banking safeguards after the global financial crisis that followed the collapse of US investment bank Lehman Brothers in 2008 by transferring supervision of the biggest banks to the central bank. Analysts said the Credit Suisse parent bank is not part of EU supervision, but it has entities in several European countries that are.
Sam Altman is an entrepreneur, investor, and the CEO of OpenAI, an artificial intelligence research organization founded in 2015. He was born on April 22, 1985, in Chicago, Illinois, USA. Altman studied computer science at Stanford University but dropped out in 2005 to co-found Loopt, a location-based social networking app for mobile devices. Loopt was later acquired by Green Dot Corporation in 2012. In addition to his work with Loopt, Altman has also been involved in a number of other successful startups. He co-founded Hydrazine Capital, a startup investment fund, and was a partner at Y Combinator, a startup accelerator program, where he helped mentor and fund hundreds of startups. In 2014, Altman became the president of Y Combinator, a position he held until 2016 when he stepped down to become the CEO of OpenAI. Altman has also been a prolific investor, with a particular focus on technology startups. He has invested in companies such as Airbnb, Stripe, Reddit, and Asana, among many others. Altman is known for his outspoken views on a variety of topics, including politics, business, and technology. He has been a vocal supporter of universal basic income and has been involved in political activism related to issues such as gun control and climate change. Altman has been named to Forbes' 30 Under 30 list and has received numerous other accolades for his work in the technology industry. Sam Altman is the CEO of OpenAI, the buzzy AI firm he co-founded with Elon Musk. Before that, he was well known in Silicon Valley as president of startup accelerator Y Combinator. Here's how the serial entrepreneur got his start, and ended up helming one of today's most watched companies. Sam Altman, 37, grew up in St. Louis, Missouri. He learned how to program and take apart a Macintosh computer when he was 8 years old. He told The New Yorker that having a Mac helped him with his sexuality. Altman came out to his parents when he was 16. Growing up gay in the Midwest in the 2000s was not the most awesome thing, he told The New Yorker. And finding AOL chat rooms was transformative. Secrets are bad when you're 11 or 12. He attended John Burroughs School, a private, non-sectarian college preparatory school in St. Louis. Altman came out as gay to the whole community after a Christian group boycotted an assembly at his school that was about sexuality. We discussed what is the best thing we can do to ensure the future is good. Elon Musk told the New York Times in 2015. We could sit on the sidelines, or we can encourage regulatory oversight, or we could participate with the right structure with people who care deeply about developing AI in a way that is safe and is beneficial to humanity. Some of Silicon Valley's most prominent names pledged $1 billion to OpenAI along with Altman and Musk, including Reid Hoffman, the co-founder of LinkedIn, and Peter Thiel. After the 2016 election, Altman, who tweeted that he voted against Donald Trump, said he decided to talk to 100 Trump supporters around the U.S. to understand what they did and didn't like about the president. He also wanted to know what would convince them not to vote for him in the future. In a thread on Twitter, Altman said he was voting against Trump because I believe the principles he stands for represent an unacceptable threat to America. At a Strictly VC event in 2019, Altman was asked how OpenAI planned to make a profit, and he said the honest answer is we have no idea. Altman said OpenAI had never made any revenue, and that it had no current plans to make revenue. We have no idea how we may one day generate revenue, he said at the time. Altman became CEO of OpenAI in May 2019 after it turned away from being a non-profit company into a capped profit corporation. We want to increase our ability to raise capital while still serving our mission, and no pre-existing legal structure we know of strikes the right balance, OpenAI said on its blog. Our solution is to create OpenAI LP as a hybrid of a for-profit and non-profit, which we are calling a capped profit company. Altman flew to Seattle to meet with Microsoft CEO Satya Nadella, where he demonstrated OpenAI's AI models for him, Wall Street Journal reported. After that, OpenAI received a $1 billion investment from Microsoft in 2019. Current and former insiders at OpenAI told Fortune that after Altman took over as CEO, and after the investment from Microsoft, the company started focusing more on developing natural language processing. Altman and OpenAI's chief scientist, Ilya Sutskever, said the move to focus on large language models is the best way for the company to reach artificial general intelligence, or AGI, a system that has broad human-level cognitive abilities. On October 21, 2021, Altman and his co-founders, Alex Blania and Max Novenstern, launched a global cryptocurrency project called WorldCoin, which wanted to give everyone in the world access to crypto by scanning their iris with an orb. The company was started in 2020, but stopped operating in a few countries in 2022 due to logistics issues. In January, the company recently tweeted that it has reached 1 million people and has onboarded over 150,000 first-time crypto users. Under Altman's tenure as CEO, OpenAI has released popular generative AI tools to the public, including DALL-E and ChatGPT. Both DALL-E and ChatGPT are known as generative AI, meaning the bot creates its own artwork and text based off information it has been fed. After ChatGPT was released on November 30, Altman tweeted that it had reached over 1 million users in 5 days. ChatGPT was made public so OpenAI could use feedback from users to improve the bot. A few days after its launch, Altman tweeted that it is incredibly limited, but good enough at some things to create a misleading impression of greatness. Altman tweeted that ChatGPT was great for fun creative inspiration, but not such a good idea to look up facts. ChatGPT recently began testing a paid version of ChatGPT called ChatGPT Professional that is supposed to give better access to the bot. In December, Altman tweeted that OpenAI will have to monetize it somehow at some point. The compute costs are eye-watering. In January, Microsoft again announced it was making a multi-billion-dollar investment into OpenAI. Although specifics of the investment were not shared, it is believed Microsoft's investment is worth $10 billion. Before Microsoft's investment, other venture capitalists wanted to buy shares from OpenAI employees in a tender offer that valued the company at around $29 billion. Altman is still interested in nuclear fusion and invested $375 million in Helion Energy last year. Helion is more than an investment to me, Altman told TechCrunch. It's the other thing beside OpenAI that I spend a lot of time on. I'm just super excited about what's going to happen there. He told TechCrunch that he's happy there's a fusion race to build a low-cost fusion energy system that can eventually power the Earth. Last month, OpenAI launched its pilot subscription plan for ChatGPT Plus, which costs $20 a month. People who pay $20 a month for ChatGPT Plus get benefits such as access to the site even when traffic is high, faster responses from the bot, and first access to new features and ChatGPT improvements. The subscription is only available for people in the US, and OpenAI said it will soon start inviting people on the waitlist to join. Altman recently wrote that OpenAI's mission is to make sure AGI benefits all of humanity. He laid out the company's short-term and long-term expectations for AGI development in a blog post. If AGI is successfully created, this technology could help us elevate humanity by increasing abundance, turbocharging the global economy, and aiding in the discovery of new scientific knowledge that changes the limits of possibility, Altman wrote on OpenAI's blog. Despite its potential, Altman said AGI, or artificial general intelligence, comes with serious risk of misuse, drastic accidents, and societal disruption. But instead of stopping its development, Altman said society and the developers of AGI have to figure out how to get it right. Altman went on to share the principles OpenAI care about most, including that, the benefits of, access to, and governance of AGI to be widely and fairly shared.